Good morning, class. Welcome to another English lesson. Today we are talking about taxes. Let us begin with an American founding father, Benjamin Franklin, who said, "There is nothing certain in this life except death and taxes." This is certainly true, so let's buckle our seatbelts and get ready for an exciting video on taxes in English. It's tax season again here in the US, meaning the months leading up to the tax deadline, which is April 15th. A deadline is the time something is due, or the last day you can complete something. We use the phrase file one's taxes. So I need to file my taxes. Have you filed your taxes? I finished filing my taxes. Or we say I turned in my tax return. I completed my tax return. Taxes in the US are very complicated. Many people hire a tax professional to complete their taxes. There are companies or individuals who their entire job is to prepare other people's taxes. So you can hire these people. Or if you choose to do your taxes yourself, you can grab the forms from your local library. You can also download the forms online. Just know that people on average spend 13 hours completing their taxes because they're so complicated. So do not put it off or wait until the last minute to do your taxes. Tell me in the comments how long it takes you in your country to prepare taxes. Hopefully less than 13 hours. In the United States, the IRS, or Internal Revenue Service, is responsible for keeping track of who pays their taxes. So the IRS enforces the tax law. If you do not pay your taxes, the IRS will come for you. How do taxes work? If you are an employee, the government withholds some of the money you earn every paycheck throughout the year. The government withholds money. The money is withheld, adjective, and that money is called withholdings. That's the noun. The employer withholds the money from the employee's paycheck and gives that to the government. How much of your money is withheld depends on how you, the employee, fill out your W-4 form. So when you start a new job, your employer has you fill out the W-4 form. If you have the government withhold too little money, you will end up owing taxes in April. If they withhold too much money, you will get a tax refund in April. You will get some of that money back. If you are an employee of a company or organization, you will receive a W-2 form in January, February, or March. This form shows you how much money you earned throughout the year and how much money was withheld for taxes. So these forms show all of your earnings or money you made from the previous year. Self-employed or freelancers will get 1099 forms. And there are other forms for businesses and such. Most people are an employee and receive a W-2 form. Okay, are you ready to fill out your tax forms? This is gonna be so fun. Most people fill out a 1040 form. 1040, also known as individual income tax form. You will either fill out this form as a single filer or married filing jointly. Jointly just means together, filing together. If you're married, you should file with your spouse. First, you will need to enter your gross income. Your gross income is all the income you made before taxes. All the income you made before taxes and before expenses. Then you deduct or take away either the standard deduction or itemized deductions. You have to choose standard or itemized. Itemized deductions can be like student loan interest, retirement contributions, or moving expenses. This year, the standard deduction for a single person is $12,400. So if your itemized deductions equal an amount less than that, you should take the standard deduction because it's bigger. It reduces your taxable income by more. After you subtract these, you get your taxable income, or in legal terms, adjusted gross income, or AGI. Okay, let's say I made $60,400 last year. I did not, but I wish I did. So my gross income was $60,400. I take the standard deduction, which for single person is $12,400. So my taxable income, or AGI, is $48,000. That is my AGI. Now, the United States has a progressive tax system, meaning if you make more money, you will pay a higher percentage in taxes. But we do not keep things simple. If you look at this table, it appears that if I made $60,400 in my gross income, that I will pay a 22% income tax. It is not that simple because we use marginal tax brackets, meaning the tax brackets do not apply to the entire income, but to the income within the specific range. These ranges are called brackets. For example, like we said, my taxable income is $48,000 after taking deductions. So my income between $0 and $9,875 will be taxed at 10%. So the tax I owe in this bracket is $987.50. Now my income between $9,876 and $40,125 is taxed at 12%, which comes out to $3,629.88. Everything over $40,126 will be taxed at 22%. So after I took out the other brackets, I still made $7,874 within the 22% bracket, which comes out to $1,732.28, meaning my total tax bill is $6,349.78. I need a nap. So that number is my tax bill. That's what I owe in taxes, which is a lot. Luckily, we have tax credits. That's money you can subtract from the tax that you owe for things that the government wants you to do. Okay, so while deductions reduce the amount of taxable income you have, tax credits directly subtract from the tax you owe. Some examples of tax credits are lifelong learning credit, child care credit, clean energy credit. There's a bunch of other kinds of credits. So let's say last year I replaced my old washer and dryer with a new energy efficient washer and dryer. For this, I got a tax credit for $500. So that would knock down my tax bill to $5,849.78. So you figure out your federal taxes, but don't think you're done because there's also state taxes. If you're doing your taxes with a software program, it'll usually calculate your state taxes at the same time. But just be prepared to pay an extra $20 or so for the program to file your state taxes. Almost always what you owe in federal taxes will be much more than what you owe in state taxes. And you might be thinking, Erica, I don't want to pay taxes. Can't I just lie? And yes, you can cheat on your taxes. Does anything happen if you do? Well, the IRS can audit you. Audit means after you file your taxes, the government comes and they look over everything, all the details you wrote in your taxes to see if you lied. They will check every detail, all of your deductions, all of your tax credits, everything you listed as income to make sure you told the truth. If you did not tell the truth, you can be fined or you'll have to pay a penalty. Wasn't that fun? Isn't tax season the most glorious time of the year? There is so much to know about taxes. Most native English speakers don't even understand taxes, which is why many people hire a tax professional. If you are a do-it-yourself kind of person, there's plenty of information out there on the internet. If you have one job, you're getting one W-2 form, you don't have a lot of deductions or tax credits, it's pretty easy to do yourself. But once you start getting property and you'll have children and you're paying childcare, maybe you have a business, maybe you have extra side employment, it can get more complicated. If you do decide to do them yourself, just be prepared to spend a lot of time researching. I'll put links in the description for websites and videos if you'd like to know more about these things. Best of luck paying Uncle Sam, and we will see you next time. Goodbye.